This is For Advisors by Advisors. I'm your host, Evan J. Mayer. Today, we have a special guest. Actually, he's a neighbor of mine across the hall, Mr. Mike Krumholz. Welcome, Mike.
Thanks for the applause, Evan. Appreciate it.
Anytime. Mike is the VP of Sales and the Boca Branch Manager for Fairway Independent Mortgage. And I met Mike about 3 years ago. I just gone independent. We took the practice independent. I was working in the bank channel, so obviously a lot of the people I was dealing with were in the bank channel, and we had to refer to the bank in general. And I never had the ability to refer outside because that was considered selling away. And so if there was a better situation for my client, per se, couldn't do it. And that was okay because we actually did have a good mortgage division where we were at, and the rates were extremely competitive. So didn't have necessarily bad service. But I had met you because I had met somebody that worked in your office, and the follow-up was not great, which goes, and I talk a lot on this podcast about, there are good advisors at many firms and there are bad advisors at those same firms. And the name on the door is not always the person you're working with. Well, you came to the rescue. We ended up taking the client over to you. You closed the deal, did the right thing for the client, got the situation, but you were very communicative. And the first thing with me and my clients is that, we want to deal with somebody who is extremely communicative. And you were that guy. And ever since then, if I have a mortgage situation, you're normally my first call to make. So, Mike, yeah, you're awesome, and welcome to the show.
Thanks, Evan. Thanks for having me.
Give a little background on yourself. I thought, just to give you the aura of the show is For Advisors by Advisors. It's to kind of inform and educate the advisors out there. A lot of what we might talk about today, they'll know. But give us a little background on yourself and how long you've been in the business and your history in the business.
Well, I've been doing this now approximately 18 years. Started at a small firm. Then I went off to another firm only simply because that they actually closed. I don't like to move around. I'm very loyal, maybe to a fault. I don't believe it makes sense to keep popping around to different places. And now I'm at Fairway for over 5.5 years. The firm's amazing. We pretty much, whatever we say we can do, we do. There's no smoke and mirrors, so to speak. So I enjoy that. Being in this industry, I have a background in finance. I love people, so I've kind of taken it to fish to water in that respect. I enjoy now at this point, it's not so much dollars and cents, it's about helping people. And when you start in the industry, you think about how many deals you're going to do, how much it's going to be, how much you're going to make and all that. But now it's really what incentivizes me and gets me out of bed every morning is seeing me help a client and actually go to the closing. I try to go to all the closings to be there as an advocate for the client, to make sure that they're knowing what they're signing, because I know it, not the layman doesn't. And the other thing is, selfishly, I get to celebrate,
Yeah, I think this goes to speak to you. What I liked about dealing with you was when the underwriters get involved, it's not like you go away. And at SunTrust, as an example, or other places that I've been, the minute the sales guy's done, it gets to the underwriter. It's now the underwriter and the client going at it. And you've been a very good advocate for that. So thank you. Just a few questions. It's been an interesting year, to probably be a mortgage broker, and the concept that we haven't seen rates move up this dramatically. What was the highest you were seeing the 30-year mortgages going for during this recent, last 8 months of rising interest rates?
Yeah, I would say around towards the end of the second quarter, we were 6.25, depending on the credit score, probably a little bit higher.
Yeah.
Then it dipped back down below 5, high 4s, and now it's crept back up to close to the mid 5s now. Yeah, you see the 10-year Treasury, you see it's around 3.11 right now. So that's kind of a good indicator. You see it's kind of crept up pretty quickly in the past 3 weeks.
Yep.
From 277 or thereabout to this. So yeah, it's kind of jumped quickly, and it hasn't. And obviously with what spoken with Powell in Wyoming, Jackson Hole, I think it's probably going to rise a little bit more,
Yeah, we'll see. The difference is obviously the Fed controls the short-term rate and not necessarily the 10-year and the mortgage rates, right? But at the end of the day, we'll see what happens. So a couple things. Most people know about 15-year, 30-year mortgages. I actually recently took out a 10-year interest-only ARM. I know about the 7-year ARMs. Are those the main? Obviously, most people do the 30-year, do the 15-year. You don't see ARMs as much, though for me, it made sense in what I was looking to do. How many mortgage variations are there out there?
Well, you do have the 30-year, the 15-year, the 20-year, 25-year fixes, okay, and also even a 10-year fixed. And then you have the 3, the 5, the 7, or the 10-year ARMs, whether it's principal and interest or interest only, like you just mentioned. And then we do have the non-traditional, what they say, that's not backed by Fannie, Freddie, where they are basing it off of either bank deposits or they have something what's a debt service loan where they base it on an investment property off of what's actually being generated from the property. So say you're making $3,000 a month on the rental or what the analysis of that area is, and you're paying $3,000 a month between principal, interest, taxes, insurance, and association. As long as it's one-to-one, they'll qualify. They don't even look at their credit. They look at the credit to qualify, but they don't look at their income and assets so much. So there's a couple different ways to get people homes now. They might have to put a little bit more money down on that non-traditional aspect, but they can get it done.
They can. I mean, obviously you're on the independent side, so you don't have, where a bank might have, millions of dollars of clients' assets. They can give them a really easy, good loan, quick loan. But you're independent, so you have a little bit of flexibility, but you don't have those assets. Do you ever see that as a challenge?
Oh, most definitely, yes. And I'll tell a client if they're coming to me and they have a private banking relationship, you might be best off working with them because they're going to cross-collateralize your funds. I mean, that's just, the bottom line. So you'll get loaned your own money at a lower rate. They can do that. They want to keep the deposits there. They're incentivized to do that. So in that respect, yeah, I can't compete in that, but I can compete in service, and I will make sure that the client gets the deal done. Whereas sometimes if they go to a bigger bank, not to name any names, but it's tough to get someone on the phone,
Yeah, no, absolutely. And we've seen that actually, come up when I was in the private bank. We would be able to give people special mortgages that just we couldn't give to the everyday person coming in. Now, Fannie and Freddie, they're buying the mortgages you're doing that are non-jumbo related. Is that accurate?
They are buying, yes, that are yes, correct.
Now, how has that changed since, 2010, 2011, since the financial meltdown? Are they requiring a lot more documentation? Has the process changed? What have you seen change along those lines?
Oh, most definitely. The documentation has gotten more in depth. I joke sometimes with people and say, we're going to need your DNA or your blood type. And you can hang your mortgage note on the wall like you're getting a diploma, because it is sometimes quite difficult with some of the stuff that they ask for. So the pendulum has swung from when he was getting 100% financing, no income, no assets, the NINAs or the CISAs, where they didn't really have to show anything. Everything was stated, compared to now where, you pretty much have to show deposits that are over X amount of dollars. So anything, that they look for, they want to make sure that they see is to the detail.
So anything under a jumbo, what's the jumbo right now going for?
647,200 is the conforming loan limit down here in the Tri-County area.
Got it. So it changes dependent upon what county you're in?
100%, yes.
Yeah. And so the 647,200, if it's under that, pretty much most institutions are selling those to Fannie and Freddie and are going to stick to the guidelines that Fannie and Freddie want. Is
Definitely.
That accurate?
Yes, they will securitize them.
And then when it comes to the jumbo loan specifically, what changes there? Now, obviously, Fannie and Freddie are not buying those. You're independent. Does your company hold those, or do they sell those to a different bank?
We're delegated and corresponding with pretty much every big bank there is that are doing the jumbo portfolio loans. So we will table fund the deals. We will underwrite the deals. So we do everything in-house.
Table fund basically means you'll take it to the finish line, and then maybe at the finish line when it's over, somewhere down the road you may sell it.
Correct. After we fund it with our own money,
Yep.
then it will be sent over to servicing through whether it's Chase, whatever, Truist, whoever has got that loan that we've, Redwood, whoever we've underwritten it under. That'll be their servicing going forward.
Now, on compensation, just interested to know, based upon that selling, you keep the original compensation, they get paid on the ongoing loan. Is that accurate, or do they get a little piece of that compensation
They get
down the road?
Well, our company, when we sell off the servicing, they do get something in the back end on the secondary market for servicing, as long as the loan keeps performing.
Got it.
That not the loan officer per se, but the company would get some fundage on that.
Yeah, absolutely. And with the interest rates fluctuating, and obviously we've seen the prices here going up significantly, and I think we've seen them come down a little bit, I want to say. I mean, Boca's kind of an interesting nutshell, and I say our state is a very attractive state on tax purposes and other things that might create our state prices to not necessarily go down but keep going up. Are you finding it hard to get the mortgage situation going, or you lock in that price at, if they get 3 weeks ago when the mortgage rates were a lot lower? I mean, those clients that you're working through from 3 weeks ago are kind of locked into that price as long as it closes within a period of time.
Yeah, well, we have 30-day, 45, 60, 75, 90-day rate lock periods. So when I speak to the client, I give them everything. I say, this is where the market is right now. This is what your P&I principal and interest payment is going to be. This is what it will change or differentiate for each 1/8%. So they kind of can see where it's going. And if they want to wait, that's up to them, and they want to hedge it and see if the market's going. I tell them, hey, this is what's happening in the marketplace. This is the news that's going to be going on for this week that could make it quite volatile. So as you see, the market is quite volatile right now. So for me, I'm very conservative. If I'm okay with the payment, I lock it in. And that's the advice that I give to the client. I don't like to play around with that because, the market could spike and you're 1/4% higher,
Yep.
I do think, and I don't know where your mindset is, but down the line, I think we'll probably be where we'll be in a small recession, if you want to say, or whether we're in it right now, whatever, in maybe about a year or so, and the rates will come back down. And maybe they won't be back where they were in the high 2s, low 3s, but maybe they'll be in the high 3s, where if you're getting a loan right now at 5.25, it's going to be worth it to refinance.
Yeah, and I can very much see that. And honestly, it might not be a bad idea to do some interest-only ARM type of situations, dependent upon where do you plan on living in that house long term or not, and potentially refinancing. It's just a question of when, I think, right?
If you can qualify for the interest-only, that's a great move.
It is, right? Yeah. Jumbo mortgages. Obviously, you're going to be selling those to the open bank. So when it comes to a jumbo mortgage, Fannie and Freddie seem to want all their ducks in a row, right? And you guys want all your ducks in a row for them because you have to sell it to them. I've heard both arguments. I've heard jumbos are actually easier because there's the bank that's actually buying them, and so they don't have to stick to the exact guidelines. Now, you're independent, and I know you're going to end up selling it to one of the big banks. That's kind of, guess, where my question's going. So based upon that need, do you find that the jumbos, you need to document a little bit more, or in the concept of what I initially said, do you think that's maybe a little easier?
No, most definitely you need to document more. The debt to income ratio is going to be lower, whereas Fannie, Freddie can go up to possibly 50%. The jumbos, 43%. The credit threshold in terms of the FICO scores, Fannie, Freddie can go down to 620. The jumbos may not even go to 700, maybe 680 if you're lucky, depending on how liberal they are.
Yeah.
Reserves, they're going to want 6 to 12 months reserves, and depending on if you have other properties, they're going to want reserves on top of that. Whereas Fannie, Freddie,
reserves meaning investable assets.
Reserves meaning principal, interest, taxes, and insurance. They call it PITIA.
Yeah.
And basically, they want to have 6 months of that housing payment. So
assets. Yeah.
Yeah. So if your payment was $2,000, they want to make sure that you have $12,000. If it's $4,000, then they want to make sure you have $24,000.
Yeah.
So that's something that a jumbo lender would want. Whereas a Fannie, Freddie, they may not even ask you for reserves. Or Ginnie Mae that's FHA, or that's another subject. But in terms of the reserves and the requirements, I say the jumbo is much more stringent, much more.
And interesting enough, we know as advisors and just being in finance that it is not as easy to get a mortgage as it was back during the crisis. But the idea that we could re-enter a crisis of that kind of magnitude again in the future, it's always a possibility. But at least in the short term, it doesn't look anywhere near that from what we're seeing. You see the same thing, correct?
Yeah, but yes, because of the underwriting guidelines and everything that's been put in place, no, I think that, 100% financing, that is out the window. The stated income, stated assets out the window. No doc. I mean, I get a lot of people that still ask me, are there no doc loans? And we're not underwriting any no doc loans unless you're going to go to a Charlotte and then pay crazy amount of interest.
Yeah.
So, yeah, but I do definitely think that crisis, is kind of averted, so to speak, with the new guidelines that have been put in place. The pendulum swung.
Yeah, I figured. I wanted to hear from your point of view. The mortgage can be confusing in the concepts of the numbers. So can you break down, obviously you're independent. Banks are, from what I've seen, they tend to stick to whatever rate based upon FICO score and assets and, how much you're putting down and all of those measurements. Concessions are mixed in, right? Talk a little bit about how that works with concessions and pricing, kind of what what your thoughts are, and then how does independence change from you to the bigger banks?
Yeah, we're an independent lender. We don't have a brick and mortar like a big bank and that type of overhead. We do have overhead, but not to that of nature. And in terms of the flexibility on rates, they're pretty much black and white, I think, and they're not going to do any concessions, price concessions. Our company will do that if it's going to help the client. Sometimes if it just makes sense by going an 1/8% lower because their debt ratio is going to be there, we'll go to corporate and say, hey, listen, we need this flexibility, and we'll make less on the deal. Sometimes we may not even make anything on the deal just to help the client. if it makes sense. We're not here to lose, but at the same time, if we can help a client, we're not just going to close the shades and say, sorry, we can't do this. Whereas if they go to a big bank, if it doesn't meet their guidelines, their debt ratio doesn't hit XYZ, then they can't do anything for them. And then they're stuck. They're going to lose the house.
Are all independent firms different? In financial advising, independent firms are all different, right? Based upon pricing, what we can do. Is that the same thing?
Yeah, most definitely. There's a lot of flexibility. It's like if you go to one store versus another retail store, you're going to see different map pricing. One will be at this price. One might be a couple dollars less. Same thing with the gas. You go to the different, so the same thing, whoever's trying to buy the rate that day, their volume might be low and they might say, okay, we need more deals to come in to help our underwriters and our processors get some work to be done for that day. So they'll lower the rate, accordingly. That's just my opinion.
For you, you had to get a mortgage license. Is that like an exam situation?
Mm-hmm.
Yeah.
Yes.
And is there continuing CE that has to be done each year?
Yes. As a matter of fact, I'm going through that right now, and I'm licensed in different states. So I have to do Florida, Texas, California, New Jersey, which I'm licensed in. So
you're
quite a bit of hours.
Currently, you're licensed in those 4 states?
Yes. And our company has all 50 states. But, for me personally, that's where I have to maintain the license and pay the fee and also do the continuing ed.
Got it. So very similar to in our business as well. So you're in 4 states, but Fairway is in multiple states.
Well, all states, every state.
All states. Okay, great.
We're actually number 7 in the U.S. in retail. We did $72 billion last year, and this year we're on par for I think about 35 right now.
Where are you guys headquartered?
We're Madison, Wisconsin, and Carrollton, Texas. We have dual headquarters.
Okay, maybe for tax purposes, who knows?
Well, I think the CEO he's from Madison, so and then now he lives in Texas, so he maintained both places. Great story too there.
Yeah, very cool. We're getting to the end of the podcast. Is there anything from the audience? Now, keep in mind these are other financial advisors. We'll give out your contact info, but if you had to say, working with a independent mortgage firm is the way to go, what would you say? And is there any advice that you would give to the people out there?
I mean, I'm not necessarily saying that we're the end all be all. Independent, is the best thing for you. I think it makes sense to shop and see what's out there. The positivity about our company is the service. I mean, the speed to respond. That's what you need in the market right now, because if there's multiple offers, and especially what was going on 5-6 months ago, if you're not there to help them and get this thing closed quickly, they're not going to go to you. They're going to lose a deal.
Yep.
So what we've been doing for our clients, and I've done for some of yours, is we actually get them approved prior to them finding the place. So we do what is a TBD. It's called the Fairway Advantage. So basically, they will actually have a loan approval. So when today, I spoke to 2 listing agents, and they said, hey, how far along the line have you gone with the client? Have you read their credit report or whatever? I said, actually, we've already gotten them a loan commitment. It's gone through underwriting. Really? Are you really? How quickly can you close? We can probably close in 15 days. All we need to do is we got a rush appraisal. So that's an advantage, as if they come to us as an independent mortgage broker, as opposed to going to a big bank, where after 4 o'clock, you may not even be able to get someone on the phone.
That's true. Yeah. The process could take 30, 60 days. I never knew you could close that quick. So, yeah, you guys have that capability.
Yeah. So that's that. We have 11,000 people that work for the company. So the infrastructure is there. That's a big thing. You're as good as whoever you work with and the support you have. And that's what gives me the confidence to go to all the closings and know that another thing I didn't mention, Evan, is we pre-fund every deal. So we actually send our wire the day before, and we authorize the funding of the title company. So you're not sitting at the closing for an hour, 2 hours for a funding number. It makes the experience amazing for the client. The seller gets their money. The realtors get their money. The title company doesn't have to be, everybody on top of them trying to see, when are we going to get our check? They can do all this stuff in advance. So it just gives, a major advantage. And that's another positive thing that I wanted to leave with you. About our company.
That's huge, as a matter of fact, because when you're going through those closings and you're setting the time, as the buyer or the seller, it's just a nerve-wracking time. And one less thing to worry about is the money, as the money get to the escrow agent, right? Which is a huge thing. Where's
the money, honey? Seriously, that's the bottom line. At the end of the day is, can you close? Can you close on time? Yeah. And make the experience as pleasurable as possible, because it's a stressful situation, when you're going through buying a house.
And I think that's a huge takeaway, because it's not, there's something called value in our business, and there's value in your business. And, your cost might not be as low, but if your ability is that you're there, you can make it a lot less stressful. I will easily pay 1/8 of a point on an interest rate to get a better experience.
There is a premium for everything, and hopefully that makes sense.
Yeah, absolutely. Well, Mike, it was an absolute pleasure. Thank you for coming in today. How can anybody reach you if they have any questions?
Well, thanks for having me, first of all.
Yeah.
Appreciate it. How can they reach me? They can call me on my cell phone. I give my cell phone to everybody. I have no problem whatsoever. Answer the phone weekends and evenings, 561-289-7718. My email address is Michael, Michael, at Fairway, FAIRWAYMC.com. That's pretty much the two best ways they can get me, I guess.
Excellent. All right.
Or come to our office right here, right?
Come to Boca. Come to Boca.
Come and hang out with Evan and I.
As always, feel free to reach out. You can reach us on Instagram. You can reach us on LinkedIn. You can email us at info@fortunawealth.com. And please leave feedback. If you have any questions for Mike, thought Mike did a great job, we love to hear your feedback. And we look forward to seeing you at the next show. Have a good one.